Don't freak yourself out. Rapid fire, true or false? All medical debt shows up on your credit report.
Welcome back to the pod. This is, I say episode 2, but what is it really? Episode 10 now?
Yeah.
That's crazy that we're this far. But
we're in it.
I want to give a shout out to one of our official sponsors, the Buzz Coffee and More. I am drinking a frozen Carpenter, which is a mocha. Oh wow. Right? The brand's not gonna mess with me no more.
They're gonna be like,
but they're right here on East McNeese. East McNeese pointed west on East McNeese across from like cat a corner from the Crying Eagle. Love the coffee, even better vibes, family owned business, very God first people, and they just align. So check them out.
Awesome. I would say a little bit more, but I don't drink coffee. But the energy in there is pretty solid. I have been with Donovan a couple of times. Those girls know what they're doing. And guess what? They'll recommend something for you, and then it'll be great. So, guys, welcome back to the podcast. Like he said, episode 2, episode 10. We are here today talking about, I think, something that doesn't really get talked about a lot, and that's healthcare costs. How much that affects home ownership. It's huge. So let's just sit here and have a few minute conversation of, healthcare costs. What is it? What is it like? What are the worries? What are the fears? What are everything about it? Medical bills and bad insurance can absolutely derail your plans to buy a house. It really can. It hurts.
I think it's because of the unexpectedness of it. Life is always throwing you curveballs, and you just never know when you may have to take a trip to the ER, whether it's a car accident, it could be a medical emergency. And people don't realize that even if you have great insurance, there's a good chance you're going to get hit with the bill. And it's not always obvious that you're getting hit with it till maybe like a month or two after.
Yeah. So let's lay the groundwork. Okay. Let's just talk about this. And I don't think many of our viewers know this, but healthcare is the number one financial concern for middle American people right now. That's crazy. That's crazy. We talk about inflation so much that I think healthcare just kind of skims right underneath that, but that's the reason that I think people are losing houses because of healthcare and how much it costs and everything else. But keep going with that.
Man, it's crazy because like we've talked about budgeting, and you'll be surprised, like depending on the surprise of it, that out of nowhere now your fund that you had saved up now has to start disappearing. And even if you get on a good monthly plan, it can still just eat away because all that stuff, when your lender goes and pulls your credit, all that stuff pops. Now, if it's, I want to say the rule of thumb's under $500 or $600, I think it won't appear. But fact check me. Like, I'm not the insurance guy or the health guy, but I think it's good. So
40% of adults in the U.S. say they have gone into debt because of medical or dental bills. That's insane. I would never think that. And even as a person in my 40s, I still that's hard for me, a hard concept to grasp. 40% of people have this issue. That debt hits your credit score and you're done. You're done.
It can turn you from sometimes like the window shopper thing I talked about last episode. Like you can go from, hey, I think I can buy this. I look at the price tag to like, oh, I don't, even though I may be able to buy it, I may not qualify in the lender's eye where the underwriters could have faith and confidence in you. Because at the end of the day, it's a big numbers game.
Dude, that's the thing. Medical bills, sneaky. Like sometimes you don't even know about them. Like I've gotten bills for my kids and I'm like, wait, what's this? I have to turn to my wife and say, hey, what is this? Because sometimes I feel like insurance is such a, hey, I have insurance, I'm taken care of. But sometimes you're really not. You still owe a portion of that. And sometimes it falls through the cracks, even with somebody like me. I mean, you're like, oh crap, it's here. You got to pay for that.
Yeah, and something I see is that people sometimes, some of my friends my age, I mean, I'm 26, I'll be 27 this year, but they'll opt to honestly not even have the health insurance sometimes. But the only problem with that is that people may not have the $200 to $600 per urgent care visit. I was working with a young lady, freelance, did her own work, great income, was a dog at her job. Like she even did some work for me, but she had a surgery and there was a unpaid bill and it had hit collections before she had realized. And we were really deep into the process before it was like, yo, like this just popped up. Like did you know? And she's like, no. And it's a tough conversation to have. And it was tough to see kind of like the light leave her eyes a little bit of like, I may have to put the vehicle in park for a little bit. So,
I bet that hurt because you have somebody that's ready, eager to go, and then they might have to pause. Can you imagine? Hey, I'm ready. I'm pre-approved. And then something pops up. Well, pause. It's a hard shift. It's a hard shift. And it's not just emergencies either. It's chronic conditions. Diabetes, asthma, mental health meds, everything. It adds up so quickly that sometimes you don't even know where you're at. It really puts you in a head spin.
And dude, like, I don't think people realize that the FICO score and like, so credit and whatnot, no matter how small the bill is, it still takes away from your potential. And once something hits, people need explanations of everything because these underwriters, like, they're going to try really hard to not let another market crash happen. And they're not just going to be, it's not Oprah no more as far as you get a loan. Like, it's very much like tight wadded, especially in a market like now.
Yeah, I mean, that's the thing. Your debt it goes on your credit score. Lenders factor it in. And guess what? Sometimes you have an unpaid bill that you don't know about. 50 to 100 points gone off of your credit score.
In an instant, though.
In an instant.
And sometimes those things that pop up will stay on your credit for a long time. Like, I think I read that it was 6-7 years. And that is, I'm not the same person I was when I was 20, you know?
I mean, high out-of-pocket costs. I mean, these things hurt us. This is what really hurts people from buying houses. This is what people are afraid of. These are facts-driven reasons why people are scared. And you talked a little bit about self-employment. I mean, you and I, we're self-employed. We have to worry about insurance. I know for my family, I pay around $1,800 a month just for insurance. And I'm like, gosh, that's high. And then I still have bills on top of it. That's the thing. It's like, I mean, look, great for you for being a freelancer. Great for you for being a self-employed. Those are the things that you have to add up. And those are the things that go into your budget when you're ready to buy a house. And you really have to, add that in. You have to add that cushion in.
Because, like, when you're not salary necessarily, like, in your 1099 and all that, you have to show, like, it's cool to write a lot of stuff off, but that also limits your buying power. So, like, back to needing a team, you may need to go talk to somebody because, I mean, a lot of freelance people are like very independent by nature, but you may need somebody that's going to guide you through like, hey, we may not need to write so much off this year. Hey, you may actually need like take this year and just know that you may not have as much buying power as you want, but we're setting you up for the next year or the next 2 years where you could be able to really jump in and get the house you want.
And that's something that, my wife is a CPA. That's something that my wife always says to me about taxes. Scott, you can't always look in debt. It hurts us. And as a real estate agent, I know that. But as the person that's paying the taxes, I'm going to be like, okay, look, the government takes enough of my money. I don't want to keep giving more and more to them. So how can I scapegoat that? And like you said, that's the best way about having a team behind you. You don't just, you pick pick the agent, and then you trust that agent to pick the people behind them, and trust that that agent has worked with them and has a good relationship with them to move forward and getting you to the right spot.
And man, we've been kind of taking a crap on the cost and whatnot, but like, let's just provide some floaties for people. And like, I think the most basic thing you can do is just check your credit score.
Yeah.
I have the Rocket Money app. I think it's not Rocket Money anymore. Rocket Mortgage. Something happened. Anyway, I got an app on my phone that reports to me every month, but also if something good or really bad happens, it'll send me an email, and it's like, because dude, that stuff used to stress me out, because I'm still like working to build mine up more. Like, I had a little oopsie daisy. Also, there's some student loan stuff. We'll talk about that in another episode, I believe. But yeah, so the first thing you do is just be on top of it. Don't be oblivious to what your score is, and that's the first step. And I think secondly, I don't think people realize that you can start to like negotiate certain bills, like, and you'd be surprised by like writing a letter to said whoever, like they could potentially lower the bill that what's owed.
I mean, some people don't even try. You're like, oh God, I have this bill. I don't have the money to pay for it. Just try it and call them and say, hey, look, sorry, I don't have the money to pay for this. They might take half of it off right then and there just by one quick question or one quick, please, I need a little help. I mean, these people are still people. They're not robots. They're not machines. They're not saying no. Guess what? Sometimes just ask for help and you can have help there.
And another thing is set up a payment plan. And you don't always have to go to your bank. Like I always see around Christmas time, like First National Bank DeRitter does like the Christmas loans where, they'll give you so much money, but the interest is kind of high on it. A lot of medical bills don't start increasing in price. There may be some late fees, but there's no interest. So find a way. There's usually a way if you're just willing to like do a little bit of research and like swallow the pill. Cause like it's in the past, it's over. And like we've seen how situations can go from good to bad. So sometimes you almost have to swim against the current a little bit to just fight it. Yeah,
like I said, it's working with lenders that know your situation. It's working with people that know who you are. It's a person-to-person contact. You want them to know the situation that you're in, and they might be able to give you that flexibility. And start on it immediately. Don't wait till it's like 400 days late, because then they're going to be like, wait, this person's already shady. They're already trying to get over on us. Start immediately. It's a mistake that happened. It's an accident. I mean, as my parents always said, it's called an accident for a reason. Get to it. Get to owning that little mistake that you had and pay for it. Start a payment plan, get it going.
Did they describe you as an accident?
They did. Every day, all day.
Are you the baby child?
No. Well, yes. As my mom,
definitely an accident.
Yeah. As my mom likes to say, she had 2 only children. I don't know how that works, but yeah, no, I wasn't.
And how much younger are you than your
5.5 years?
That's not too bad. Me and my baby brother, are 10 years apart.
Okay, so your baby brother, was he an accident?
He's the coolest accident, though.
He is.
So
he's pretty cool.
Yeah.
But and that's the other thing. It's don't rush. Don't feel scared. Don't freak yourself out. Get on a payment plan. Help your situation out.
I like to say don't cluck.
Don't cluck.
Like you can tweak, but don't cluck. You start clucking, you're not an animal. Well, you are by science, but don't start clucking.
Don't do it. I mean, hey, how about we give them a little bonus section, a rapid fire Q&A. Hey, quick. Donovan Johnson, rapid fire, true or false? All medical debt shows up on your credit report.
I don't believe so. False.
Well, I mean, I think you are 100% right. It doesn't. Newer rules and collections. They have certain things that they look for. Another one. You should use your credit report to pay off medical bills fast. I'm sorry. You should use your credit card.
I don't think so necessarily, because like I said earlier, I think there's some interest-free payment plans out there.
Yep.
And if I could give a shout out, bro, first bank I ever opened up was at First National DeRitter. I lived in Moss Bluff, so I was like a mile away from the bank. I went to go get a credit increase on my credit card from like 500 to like 2,000 like 2 years ago. And my banker called me and was like, hey, goof, did you know that you had like a $400 like urgent care bill that you didn't pay? I was like, nah. And he's like, pay that, then resubmit the form, please. So like that just goes to show. And he called my phone. I was a little scared, bro. I saw his name pop up. I was like, oh boy, because usually it's First National Bank DeRitter, like the business phone calls me. But my boy Brandon called me, and he was just like, big dog, shake back. And I was like, I got you. And he's like, don't use your credit card to pay it either.
Don't do it. So last one, medical debt will automatically stop from getting a mortgage.
Now that's the only one I can 100% answer as false, because it may be harder, yes, but there's ways to work around it. Not around it, work through it. I think saying working through it's better than work around it.
Of course. So once again, guys, we're always here for you answering these questions. Let's wrap up. Bottom line is healthcare costs are real. It's something that we have to worry about. It's something that's scary, but it's something that we need to go through. And if I remember correctly, Donovan, I think you have some bullet points on what healthcare can do for you, or what healthcare is worrisome about.
I do. And I jotted some notes down, but I was talking to one of my good friends that's in healthcare, like insurance. I actually need to hook him up with you, because I bet he could save you a couple $100.
Yeah, that would be good.
For real, though. I'll text you after the episode. But I was just kind of asked. This is not the time to start clucking. But it's the coffee, dude. That Buzz coffee be having me. You'll notice it. If you watch close enough, you'll see it. But man, I remember when Obamacare was a big rage. And don't get me wrong, I mean, we're in Southwest Louisiana, so way more red than blue, if you're just picking up what I'm putting down. And Obamacare was like painted as awful, but if you think about it, Obamacare was like socialism in the sense of it accepted everybody.
Yeah.
So, and it was intended for like lower class people. It was never intended for the big ballers and whatnot. And if you're a big baller, it may have been better for you to go private, because if you accept everybody, that means the standard goes down and the quality goes down. So certain people absolutely need it. Like yes. I do believe that universal healthcare should be a thing, but I also believe that it shouldn't come at the expense of everybody. So that may be a utopia in my head of just something that I'm in la la land about. But like, I want to say it was for people like 60K and under, making a year, the whole family. And like, especially if you're like making under 30K, then it's like, yes, you need Obamacare. Yeah. So, and I want to say that I'm going to use Sean Murray to edit out this so he can make me sound smart. But, depending on your age and health, private insurance may actually be a way better route, and you may lower your costs like anywhere from like 20 to 60%. I know that's a big gap, but it's like shopping mortgage lenders. You can shop health insurance as well. So just don't grow weary. And some is more cash-based, pay up front, lower deductible, higher premiums, or vice versa. So I just wanted to shine a light on that, because like we always say like, this, we're good. It sucks. Like, oh, this sucks. It's not intended for you probably. And yes, you may be paying a little bit into it, but like, I just feel like it's a human right to be able to not have to like sit at home dying when you need some help. So
of course, we should all want to help one another. Hey, end of this episode. What?
Last thing, you got to think of it like car insurance. Yeah, sorry. Flag on the play. One last Hail Mary. Got to think of it like car insurance, right? Car insurance don't cover your oil changes or your tires, right?
Yep.
But it does cover when something really bad happens. So that's why I think health is so important. And I have a lot of entrepreneur friends, and I really try to encourage them to find a plan that can work for them. And there's some that could pay out of pocket, and that's great. But I'm like, dude, like I think long term, you would really enjoy being able to have a fallback as good as my boy who I'm about to send you his information. So thank y'all so much for being here. Episode, is it 10?
10.
All right, 10 now. Glad to be here for your support. I really appreciate it. I know this is fresh and new. I'm glad to just share a vision with Scott. And thank you again so much for listening. Share, like, give us some ratings, because we really want to push it out, but we also, more than anything, want to provide more value than just big yappers. So I hope you are enjoying this new style.
Talk to y'all later.